Okay, everybody, we are live. Hi, everybody. Should be able to. I think the chat is alive, so let me know if you're there. Um, okay, so today is December the 20th. We are a few days from Christmas. We had a few rough days, right? It was a little bit, I don't know, scary or disappointing. Many people were all excited about the bull run, and then we had a price correction. Um, of course, many people associate the price correction with Powell, right? Is mostly. It's funny. I always find it extremely funny how the market reacts to one single man decisions. And some of these decisions are impactful because it's about um, interest rates, etc. But first of all, even if I say, "Oh, we don't think we are going to have more than two cuts next year," well, they don't have to stick with that, right? They can always have more, um, and yes, okay, they can have an impact on the price, on liquidity, etc. But I don't know. It's so silly that the market reacts so violently just to some talk. It should be much more fundamental. It should be much more based on real things. But the market is what it is. But one lesson that everybody should learn about that is that um, Bitcoin is still a very volatile asset. Okay, and so while this entire philosophy that we have in our understanding, based on the power law, is that the overall pattern, and by the way, this is a indicator that I have shown before, but now I submitted for approval with trading views. So hopefully is going to be approved. It's actually two indicators. We are going to discuss them in a second. So, the overall pattern is this, where everything seems so regular, so precise, so coordinated. But locally, we can still be affected, right, by single event where the price is impacted. We are developing tools to also understand these single event. There is this framework of a log periodic power law. I want to do a monitor. I'm going to run soon some calculation to see if actually this event could have been predicted. Maybe not. Maybe it's not the type of event can be predicted, because if it is connected with things like Powell speaking, it has less to do with the dynamics, right? So the log periodic power law is this tool from physics that basically can even tell us a few days ahead if there is an earthquake, right? If you have to get the measurement at the right place and so on. And so the idea is that we can apply the same type of physics to identify big correction in the price. So we're going to develop eventually a monitor for this, and maybe we can pick up, if not this kind of events, other type of strong corrections. But what is amazing also about Bitcoin is that we recovered, right? There was a lot of sales, and it's a lesson, like I was saying, in understanding that everybody has a price, right? Even people that have held Bitcoin for a long, long time, under certain condition, they are going to sell. These long-term holders. I made different posts on X where you can see that there were thousands and thousands of Bitcoin that were sold. So when people tell you we're running out of Bitcoin. There are no coins on the exchanges. It takes nothing to go from a cold wallet to an exchange and sell. They don't have to sit there to be sold. See, these are some of the lies that I don't like about many other. So I'm not super popular. I don't have millions of viewers, etc. Because I'm trying to be contrarian, and not because I want to be contrarian, because if I follow what everybody else say, that will have 10 times more people. I'm trying to focus on quality information, okay, as much as I can. Like, of course, nobody knows exactly every single move that Bitcoin does, but I'm trying to have a scientific outlook on these things. When people say things that are completely silly, that don't make any sense, there is no real science behind, I'm going to tell, I'm going to say. And even if that sounds not popular and people hate it, I don't care, because I want to give you the right information. I want to give you the knowledge that you can, because I'm sharing. It's not that I know more than you. I have more experience. I have analyzed data for 30 years. And people think that we cannot use science to understand the market, but we can. People do it all the time. There are a lot of physicists that apply physics to the market. And Bitcoin, it's almost perfect and ideal because it has many, many, many regularities, both at a general level, but also at a local level, right? Even don't listen to people who say, oh, the power law is not useful to understand local movements. It's not true. For power law, it depends on what you mean. If you mean the straight line, no, because that is supposed to be the general trend. But we can use the same approach that we use to understand the general trend to also understand local trend. So this framework, right? This framework of the power law and the general theory of all what happens in the different cycles, how the cycles repeat themselves, that they're very regular, that we can learn things from looking at previous cycles. All that philosophy can tell us better than anything else what is going on, even at a local level. Now, what Powell is going to say is not something that we can predict, but we can also predict what the market will do in a certain sense, right? Because the idea is still this, that if we are in a bull run, the market will recover, eventually will recover. And we are not going to have a huge, big dip, It's not time yet. If this happened when the market was saturated and we were very far away from the trend, then yes, right? We could have a big correction. It could be because sometimes what happens is the market find excuses. This is how it works. It has its own cycles, but then it almost needs like an external event for the human mind to justify why something is going to happen. People say, "Oh, this gap here happened because of FTX." Well, the market was already going in that direction. It's just that now this event kind of is like a catalyst, right? You can say it's a catalyst, but the market needs to be ready. Been plenty of time where we were very terrible news and the market wanted to go up and it went up. But doesn't matter even if there were some bad events in the outside world, and the other way around, right? So it's good to start to have like a philosophy. This is why I'm proposing this idea, because I think it's the only framework where everything fits together. So anyway, so we can go a little bit more in detail. So the general idea, like I explained many times, you can watch some of my previous episodes, because you get like a framework. But basically, this indicator is like a map, right? A map of a territory where we are always, basically, we are dividing the general trajectory, right? It's always a power law, and how the power law looks like, right? So this is the idea of a power law, that if you take the log, usually on TradingView you cannot do the log, but in this graph, this was achieved almost magically. You have to look at these, like you can do it through code. You have to add an artificial axis, that is this one, right? And then you can present in TradingView a beautiful log. You see how regular, nice, and precise. And right now we are barely above a linear, the central value that is a fair value. And the idea is that, okay, this is the general trend, but then we have these bubbles, right? The bubble seems to be closer and closer because it's an artifact of taking the log. So today I was saying maybe this is the only way that Bitcoin should always be presented, because people are not confused. The message is clear: we are going up, and this, you cannot stop this trend. No matter what, we are going up. And during this day where we have this correction and people get a little bit disappointed or scared or whatever, come and watch the power law chart, right? The log chart. It's calming. It's almost like taking a meditation, right? It allows you to see what is the big picture, where we are going. We are going up. In general, over the long term, we are going up. But when you understand the power law, then you can also characterize the different cycles, because they give you, the power law gives you a frame of reference, right? When you can say, okay, the general trend is the power law, the bubbles cancel. It's almost like they don't exist over the long period of time, but they also exist. They do exist, right? And so how do they relate to the power law? They relate where they are very regular phenomena too, And I'm sorry, I don't agree with the people, and I don't know why they say, like, for example, and I will mention names because I need to mention names, like Fred, right? Fred, and it's not that I have a feud with him on a personal level, but he starts to say things that don't make sense. Like, I read a post of him where he was saying, oh, I would like Bitcoin to go 2 times higher. Okay, we can go. I say that I'm expecting a top of 200K. And then he say, and then next year, it goes also up by another factor of 2. Well, if he does that, and the problem is that he says that, and then a few days later, in particular, when things are like these, where the power law, it's a point of reference for us, right? Because it still reminds us that we are going up. He says, oh, the market is a power law. So he still supports the power law, right? But you cannot have both, Fred. You cannot. I'm sorry. You cannot have both, because if Bitcoin goes 2 pair this year and he reaches a 200K, and then he goes another 200, now will be a 400, we are very far away from the power law. It's not, and then if he goes another 2 pair next year, right? That is the definition of an exponential. If you go up by a certain amount at the same interval of time, that is literally the definition of exponential. So which one is which, right? Stick with one. And we stick with that one. I'm consistent, different from other people, because I don't care about the likes. Of course, I like your like. I like to create a community around this knowledge, but I'd rather have people that understand and want to understand than people that click a button because you're saying popular things. And if you say, it's almost like wanting both things, right? You want to have the mathematical idea of a power law, you want to have a regularity and the safety of the power law, and then at the same time you're trying to get a lot of likes by saying these super bullish, insane things, that are not based on reality and based on the data we have. The data we have right now, and it's the only scientific things. You can say you don't believe it, but you don't believe it based on what? Based on, trying to be popular, or maybe your wishes of not going down and having a huge big correction after we reach the top. It's wishful thinking. So the mathematical way and physical way and scientific way to approach this is to say, look, we are going to stick on the evidence. The evidence is we have these bubbles that seem to be extremely irregular, and they will repeat likely, right? Now, is it certain? No. But it's more certain than non-certain, right? If you had to assign probabilities, you will say, maybe one can do even a formal calculation, but right now, if the probability is much higher for the bubbles to repeat, than not. And all your fantasy about ETFs. So yeah, this is where actually this event that happened now, this correction, it's a lesson in that, because people think, oh, we are not going to have any more of these corrections, because you have too much support by the ETF, too much support by Sailor. We are not going down 10%, 15%. It's cool, we had a relatively small correction relatively to some of the correction that sometimes Bitcoin experiences, like 30%. But we are going to have corrections, So right now, there is absolutely nothing that tell us that we are not behaving like in previous cycles. And so until I see evidence for that, we are sticking with the cycle. So the cycle is going to be our guidance. And at the same time, we are going to monitor. This is why I want to have these episodes on a regular basis every Friday at this time. So we can monitor, we can check everything, we can look at all the different possible ways, we can compare with the previous cycles and see if there is any sign that we are going to have something different. We are going much higher, or maybe the cycle is not going to happen. Right now, it looks exactly like before. So in a way, it's comforting, because if there are people that tells you, we're going to have a huge crash, we are going to examine some of these claims in a moment. There are a couple. Yesterday there was a graph that is not even worth to be discussed. Let's say, we reached the top of something that is. I did say it was garbage, but then there is this roll poll claim that actually because of the correction of M2, we're going to look at the graph in a moment. We are going to go down. That this was the beginning of that. I'm very doubtful. We are going to keep an eye, because there is some signal there, or something that looks like a signal. So right now I will say it's more a curiosity than anything else, but we can check what the claim is in a moment. But let's under this assumption that we are still in the cycle regime, right? That we are going to see a cycle. The bull run started, I call it, several weeks ago. Let's examine how everything looks like, right? So this indicator is perfect for that, because what it does, you can zoom in and you can compare the previous cycle. There is no point to compare it with the first cycle, because the bull run didn't start in the first cycle. It's also interesting, right? If you love Bitcoin history, all the different things that happen in the different cycles. I was there physically, and I remember all these things. It's kind of bittersweet, to close your eyes and say, where I was at that time, that Christmas, I was with that person, we were doing these things. This was a cycle when, I basically, in these transitions, I discovered Bitcoin, in 2012. To interpret these dates, because we are shifting everything, we are shifting this by 8 years, right? So we can compare this cycle. So if you look at this cycle, you will have to subtract 8 years. But the months and the dates are all the same beside the year. So for this one, you have to subtract 4 years. For this one, you have to subtract 8 years. So talking about this cycle that happened, between 13 and 14. This was 14 year, and it was exciting, because it went very, very fast. I had a girlfriend in Florida at the time, and I convinced her to buy. I think she bought like 22 Bitcoins or something like that, and then I bought. I don't tell you what, but I lost all of them, by the way, But yeah, I had much more than that. But she bought 22, and she was all excited about I don't know if what did we buy for $300, something like that. Not even, yeah. These prices, by the way, are the correct prices. Um, I started to buy here, I think, before the bull, and then, yeah, like in probably in the 50, 100, something like that. And then she joined a little bit later, and we were excited how fast this thing was going, right? It kind of peaked at 1,200, something like that. And then was this big correction. And it was shocking because, at the time, everybody was talking about exponential. This is why I mentioned this story, right? Because everybody was talking about exponential. We knew about this bubble, but we thought, okay, this was the confirmation that Bitcoin was not tulip, because many people were saying tulip. And then I read actually this article that was the article that Orange Pill me, that was using this as an example to say, listen, it's not uh, um, it's not tulips, because when tulips crash, they never come back. And so this article was in 2012, I think, sometime here, right? And it took me some days to think, to analyze, and finally joined. But this was like a confirmation that this was not tulip, because we continued to go up and pretty fast. And since this moment on, everybody was saying exponential. And so we were not prepared for this correction. And it was pretty shocking. I had a bunch of my girlfriend was mad at me. I was trying to calm her down. Say, listen, I still believe in Bitcoin. Listen, this is just a correction. It's just a flesh wound. But he went all the time from 1,200 all the way to 250. Can you imagine? Big correction. In fact, actually, 200 something. Big correction. And people didn't know how to interpret it, right? Is Bitcoin going to zero? Bitcoin is dead. There were all these kind of things. We didn't know about these cycles, because, you need a few cycles to know there are cycles, and so this is one of the things that I'm trying to tell you. When people think that Bitcoin will be different, this time is different, times it's never different. And I experienced this one, right? This, when everybody again was very excited, and we were talking about institutional. There was a lot of talk. I tell you, people think that it's just a new thing. No, it's not, because even at that time, during this bubble, people were saying, we were using this terminology, institutional investors, etc. And I tell this story like grandpa. I am a grandpa myself, so I tell you the story over and over, that I was taking the shower and I was telling myself, maybe I should sell some of my Bitcoin to rebuy at the bottom, because now I started to get a hint, and I started to have a tool to understand, maybe this thing is going to repeat. We are going to have a cycles like before. We had, we are going to have an exponential growth, then a decay, etc. Started to put together a picture more at that time. But my ego and my wishful thinking told me not to do it, don't do it. And I was also very much exposed to a lot of halts, because the halts were going up. People were much less maxi than they are right now. They were much more explorative. And I got hurt. By this, because I didn't listen to my own advice, And this is one of the reasons why I'm trying to tell you all these things, because this time I want to be prepared. Whatever we can do, if a cycle repeats, we should be prepared. That is the main idea. This is why I want to share with you these experiences that I live on my, not just the analysis. You see, it's so different. Uh, there are very few OGs that are around. Like I'm, in comparison with Fred, for example, he's a new guy. I have been here for all these bubbles. I lived all of them one by one, and so I can close my eyes and go back in time and experience everything, because they are very emotional things, going up, experiencing the bull run and getting excited. I was running at that time an algo that was buying and selling coins, different coins, and it went like 6 pair relatively to Bitcoin. We made 6 times in a month, in one single month. This is how crazy it was. And I remember everything. I remember all the events, etc. And when the price corrected, I remember exactly when I started to realize that there was something going on, and so on and so on. And this bubble, etc. Anyway, this is when I started actually to put it together and actually have the full vision of a power law in time, in 2018, etc. And I call both the top and the bottom of that time. This is when the first ones, when I realized, okay, we have a top. I have a post to prove it. I call the top, I call the bottom almost perfectly. This when finally the entire picture, and I started to take action, corrective action to protect myself from these movements. Anyway, so we can zoom in and compare this current cycle with the previous one. And for a long time, I say it's very, very similar. It's almost a carbon copy. In fact, I didn't even notice this until now. I noticed the difference. I knew that. Okay, so let's look at it. So this is the previous cycle, right? Because that it's the best comparison because it did start more or less when this bull run started, kind of in November. And now, in the one way of understanding this scientifically is understanding the nature of a pattern. So during this bull run, we are expecting very much exponential behavior. That means basically we have a consistent gain in average, and it's going to look like a straight line. So it's not one of these TA line where people draw and we don't mean anything. I'm looking for exponential behavior because during the bubble, we do become exponential. And it's not always one single exponential. Like in this graph, for example, I'm trying to simplify and draw one single line representing, kind of an equivalent, like if we were following that exponential. And the main thing I'm trying to show here is that you see we have this decay of a top, right? Because I'm measuring the angle. This one was 23. So I start more or less where I think the bull run started. And then you can see the angle, you can read the angle, and you can see these angles are becoming more shallow, right? They're becoming less steep. And by the way, there is a lot of discussion about this. Was this the top? Was this the top? In my view, because it creates like a much more consistent picture, this was a real top, and this was a kind of a premature top. We had a double top. We kind of had like a double top even here. It's just that this one was so small that people kind of disregard it. They don't think about this like a double top. But if you see, it was more or less around the same time, So maybe there is a tendency to have some time early top, then some kind of a correction, and then we go back. This one was much more, noticeable because it kind of had the same height than the second top. Now, that could be something that we see this time. We see a double top. We will have to see. But this is what I'm trying to show, that if you think about this like one single exponential, then the growth along this exponential is slower. And this is why the peaks became smaller and smaller in terms of deviation from the trend. Now, when you look at the details, it's not that simple, right? So it's you have like a more complicated behavior, like you will have this is even, I will call it even, maybe like you can draw like an exponential here, then another one where it was going further, in fact, actually several, right? There is an exponential here, an exponential here, an exponential here. So it starts with a certain speed, then it goes up even faster, then it's faster. It's almost like an exponential where the rate of growth goes up, right? We will call it a super exponential. And then there is a correction, it kind of almost flat during this period. Then again, the same thing happened, right? It starts exponential, then it goes, this was like one single exponential up, very, very, very fast, crazy behavior, and then crash, right? So same thing, you can find similar pattern here and this one, right? Same thing. And so this is what I'm looking for. I'm looking how, if I see exponential behavior, how fast the exponential is. Like again, we had the first few days, we had a very fast motion up. Then we were moving along this line that again would be an exponential. We had a correction. It's interesting because it kind of mimics, but you can see already, right, how these angles, this angle is much steeper than this one. Not much, but steeper. So if anything, we were going faster last time. And it's kind of curious because we had a correction here. So instead of going down in the last few days, we went up fast. We had a couple of very, very good day. So this is because we had this accumulation that was kind of similar to the accumulation we had the year. It kind of ended on the 13. And then on the 13, we kind of skyrocket for a few days. And now notice there was like a small little correction. I mean, actually quite good correction, right? But similar to the correction we had here. Yeah, this was deeper correction, but kind of curious. If we want to check what happened next, we need to go here because, basically how this map works, I'm shifting everything by 4 years, 8 years. So if you go and want to know what happened next, you go back here, right? This was, because basically that one was the previous cycle. So this one. So you see this where there was this kind of small correction. It stayed kind of flat and then very, very fast. And these lasted until the kind of the beginning of the next month in January. Then huge big correction, more action up, more exponential, and all this mess, and then another top there. So we will see if we do anything that looks like that. But so far, very, very similar, very, very similar. So I'm not expecting, unless there are other things happening, etc. This bullish behavior to be broken. It's just like we had a correction. It was this external event, the Powell discussion. Some people got. There are also manipulations. Sometimes people use it. Some forces like some of these institutions, etc. They use it as a way to get liquidity. They start to open all these shorts and they try to force the market because they can afford it, right? They have so much money, they can move it around. They get a lot of liquidity by basically liquidating all these long. There were a lot of people, I don't know, some professionals, some amateurs, right? They like to open these crazy positions with 50 pair leverage, 100 pair leverage, and they get liquidated, right? And this what happens. But so far, I'm still thinking we are moving along this green line. Because why that? Because usually these exponentials are pretty consistent, at least for a certain period of time. They're very consistent. They follow momentum, and then what could happen? They could start to go faster up, or maybe there is a huge big correction. And so far, we are so early in the cycle. There is still a lot of players moving around that I'm expecting these to continue. We can also compare it to cycle here, by superimposing them. You see we're almost carbon copy. This one decided, our cycle decided to correct here. This went up for a few days, much faster. But, they are still reasonably comparable, right? And so that is the thing to look at, that we are in a bull run, we are supposed to go up, but, we are basically almost one entire year of bullish behavior, and I don't see anything that tell us that we are away from that. Now, the only thing that I always mention, and kind of made sense even more than ever yesterday, is this chart, the liquidity chart, right? So I explained this chart many times. Basically, instead of looking directly and superimposing this liquidity measure, because superimposing is okay, is another way of looking, but you should always try to look at the relationship between two things, right? So you can make a model and say, given these two things are related to each other, because basically I took these different measures, different M2 banks, etc. Not just M2, but any different measure of liquidity. I can show you the list, all this list of different measures, and then the idea is, okay, is there a relationship between the price and the liquidity? There is. It's not simple. If you look, in particular, if you look at the short time, maybe you could find something simpler. But if you're looking at the entire history of Bitcoin, it's quite complicated. It's a very non-linear model. There is a clear relationship, but it's difficult to say one causes the other. Maybe there is something else, like a third element, right, that influences both, and they are somehow related to each other. But it's interesting to see, okay, there is a relationship. Can I model one quantity versus the other, right? And this is what we are doing here, creating this liquidity model of Bitcoin, and it tell us kind of a fair value of Bitcoin if it only depended on the existing liquidity as defined, right? That definition is relatively arbitrary, but given all that liquidity sources, so it doesn't include the ETFs, it doesn't include Sailor, that we can do. I will create another indicator that includes also these other sources. Then what is the price of Bitcoin? So right now, for example, it says 36. That is what the price should be. That means basically we don't have a liquidity to support where we are right now. We are over bought, right? The price is overvalued relatively to the liquidity. And what I pointed out many times is that if you look at how things looked every single time we had a bull run, it looked like we had an excess of liquidity. You see, here, here, here. It kind of made sense, right? This is why when I look at this chart for the first time, when I produced it, you look always for regularities, right? You're trying to make sense of what you're seeing. And this was one of the regularities that made sense. Oh, okay, we're kind of exhausted, that the liquidity starts to build up. We are not ready for the bull market. When the bull market starts, there is plenty of liquidity. It supports the bull market. And in fact, actually, you could say when the other thing happens, when the price skyrockets over the liquidity model, we are approaching the end of the bull run. And this has been very regular over the years, right, over all the cycles. This time, this is different. So if you're looking for something different, I have mentioned this over and over and over again. This is what is different. And I don't know how to interpret it, right? And to be honest, I have mentioned it all the time. It's something that worries me a little bit, because the point is, are the ETFs and Sailor and whatever other source that is not detected here, and we, like I said, we can try to include these other sources, but are they big enough, are strong enough, do they have enough liquidity to actually support the bull market? Because remember, we actually, during the bull markets, we want to do better than the power law, right? The power law is the red line. We just don't want to march along the power law. We want, because this is telling us actually we are above a support. This is the support power law. There is enough liquidity to stay above a support. That is good. Now it's going down. Really curious if did we ever cross a support line? See, we never cross. That is another interesting regularity, right? Very interesting regularity. It's not very reliable in the beginning because, it was not really, probably even Bitcoin was not really driven by volatility, by liquidity. It was mostly like people joining the network and pushing it around, etc. Bitcoin was so small that it was mostly retail, right? But once we started to mature, look at this. This another regularity. In fact, I didn't even notice this. We barely went down the support line. You see, this is kind of cool. And Otherwise, we never went below the support line. And so, I don't know, are we going down where it's going to cross the support line? What is it doing? That is another regularity to check. But for sure, it's not doing what it was doing before. It was following Bitcoin along with bull run up to a point, right? With kind of, it happened usually several weeks or months before the peak, but it was almost like a, canary in the cold mine, in the cool mine, in the coal mine, It kind of was a kind of an early alert that there was a disconnect between liquidity and the price, right? It is a sign of a bubble. But now we don't have that. So I don't know. So this is a big question mark, right? Actually, I should put this huge big question mark. What is going on here? I don't know. And there are many possible interpretations, right? It could be that we don't need it, and so there is nothing to worry about, because yes, indeed, Sailor and ETFs and everybody else are enough to push these things around, and to go, because if we go to 200,000, that is, to me, still, it will be really great if we arrive there. And differently from everybody else, it's a goal that I think we can achieve. But it's not crazy like 400, 500, 800, 1 million. All these people that I think at a certain point, as a meme, is fun. I don't find it funny because it's my money. I want to talk seriously about money. Once in a while, sure, we can have a meme, but make it a meme, make it funny. We'll all laugh. But when you get interviewed and you're trying to be serious and say all this bullshit about God candles, Omega candles, Godzilla, it's stupid. It's really stupid. I think actually it could be a turn off for a lot of people. Even if we want to bring more people, it's more, and it's deceiving. You're deceiving people, and you're saying, "Oh, I'm doing it so I create a lot of FOMO and more people join." But then you're deceiving them. So why don't you create enthusiasm, based on reality instead of FOMO? I don't like it personally. I really don't like it. But anyway, so that it could be that all these other new players are enough, and so this is obsolete, and so we have to focus only on these new sources of liquidity, or maybe they are going to join, and so these new sources are basically kind of front running the liquidity that is going to come. So this is why, as everything, we are watching, right? We are watching as hawks and checking everything and monitoring anything, and comparing what we know with what we don't know. This is why these tools are good also, because they don't give us all the answer, but allow us to frame the questions better, right? You will not have a guide to understand even which questions to ask, right? This is one of the questions we are asking. This is why we are putting a big question mark. I'm trying to make it even bigger. I can 40 is the biggest thing. So it's a question mark. What is going on here? What is happening? It's good. Sometimes questions are even better than answers, because it allows you to think more about what is going on. So this is one thing to monitor, and it's a little bit worrisome, but not to the point where we can make big conclusion that something big is going to happen and we cannot sustain the bull market. Just something to monitor and be aware of. So this is where we are. We can look at other things. We can look at the volatility. So this is a diagram that I show all the time. Basically, what you're seeing here is the average return. So I'm taking an average over 1 year. This indicator allows you to choose any time frame you want. But I like the year because look at this. Like I can identify very nicely tops and bottoms, tops and bottoms, tops and bottoms. Almost pinpointing. And here, you see the price action. Here you see the return. So returns are defined as the price today over the price yesterday. So it's a ratio, right? So if you have a return, and this is where the green line is. The yellow line. The yellow line is 1. So 1 means nothing, right? You are not making money. You're not losing money. It's just the price yesterday and today is the same, 1. And the blue line, it's the power law. It's a return that if we were moving along the power law, only that, like in a perfect straight line, in a log graph, then these will be the returns. And you see how the returns are going down. So when people think about diminishing returns, they usually think with diminishing returns of these peaks. But really, it's the entire thing that goes down. They're all, every day, we are going down according to the theory in terms of the returns. That allows the system to grow bigger and bigger and bigger and takes its time to actually achieve new goals. That is the entire idea behind the power law. And you see how the average return. So basically, here I'm taking an average of all the returns over a window of 1 year. Of course, if you are on the top and you look backwards, right, it's almost being on top of a mountain, and you're looking where you're coming from. You say, wow, it's been a very good year, right? I made incredible returns. Of course, because that year, it's the bull run, right? Because it lasts 1 year. The bull run lasts 1 year. See how we leave a power law, we go up for 1 year, and if you're looking at your returns that over the last year, they look amazing, right? Because it's all bull run. Of course, if you do the same at the bottom, it will look terrible, right? And you see how it's actually below the yellow line, which means you are experiencing a loss because it's an entire year of losses, right? You're coming from the top and has been a whole bear run. Notice, by the way, how the bottoms are much more regular. There is not a decay of the bottoms. This is why we have a support line. The support line is there. It is one of the incredible regularity that the critics of the power law never mention. It's like really the most powerful thing. Tell me how we can get so incredibly regular on this bottom if this was a coincidence. It's something very powerful. It's a powerful way of understanding Bitcoin. And notice how the power law returns, the theoretical power law returns, go across the middle. But again, tells you that the power law is not just some straight line, arbitrary. It's a real deep property of Bitcoin. And the idea is that, you see, this is where we were more or less last time during this time of cycle. And you see, we kind of cross this green line. The green line, it's about 0.3% per day. Right now, the power law, if you look at it over, you go over this blue dot, a blue line, and you look at the current return per day, it's 0.1. So that 0.1%. So if it was only for the power law, every day we will make 0.1%, 0.1%. I know it sounds little, but if you compound it over 1 year, you get something close to 43%, something like this. This is actually the formula that you can use if you want to use years instead of days. So you compound 1.0120 over 1 year, and you get about 43%. This is what we do. If we only move, but you see, we are higher. We are higher than in average. Yes, in average, we go down, we go up. This is why people like Fred, they say, oh, I believe in the power law, and then, oh, I don't believe in the cycle. You need the cycle. If you don't oscillate around this and you stay over there, you're not power law anymore. The power law, or you don't have cycles anymore in the sense we always go along with the power law and stay there, and then, okay, we follow the power law. Or if you want to have these exciting times where we go much higher and we outperform the power law, and you need to come back. Otherwise, you don't have a power law. I don't know why a mathematician will not understand that. You need to understand these things. You need to be coherent, right? It's fundamental. So the cycle and the power law are amazing together, because in one end you have the incredible volatility, both up and down. Because if you were crazy and daredevil enough, where you took a small little percentage of your portfolio, and you buy puts against the ETFs, or maybe even short Bitcoin, with a small amount, because you want to do a little bit more aggressive things with your portfolio without making anything crazy or degen with the rest that you keep. Everybody's a hodler, right? But you can have a variation where some little amount of your portfolio can be used to do a little bit more aggressive things. You learn how to trade, you learn different concepts like shorting, etc., options. It's education, financial education. And if you do it correctly and you're thinking and you're learning, maybe you can buy more Bitcoins, and you don't risk too much because it's a small portion. In the beginning, you can do it even just with few thousand or $100, So the volatility of going up and the volatility of going down, it can be your friend. You can use it. You can amplify, your gains. We call it riding the waves, right? And many people think it's controversial, and I don't see what is controversial at all. I mean, Fred was, again, not because I'm trying to be against Fred, but he was saying, keep half and half. Well, keeping half and half, it's almost like you're saying you're sold 50%, because when you're going up, right, it's not exactly, but you're basically not taking advantage of the bull run, because 50% of your assets are in cash, and so you are already selling at the bottom, in a sense, But the idea is, okay, try to be a little. You don't have to do 100% Bitcoin in a bull market, but maybe if you listen to Bitcoin, not Giovanni, but Bitcoin, and the Bitcoin, it tells you that there are cycles. Maybe you want to go 80-20 in a bull run, right? Keep some cash if you want to protect from black swan events, etc. Maybe you take some of his advice, but go more into Bitcoin during a bull run. And then when you reach the top, maybe you can rebalance and go back to, maybe in that case, 60% cash or 70% cash, whatever you want. 50%, whatever, you decide, you make a plan ahead, but you get a little bit more cash when we are close to the top. So you can play all these things, knowing, it's almost like knowing music, or understanding a field. Want to make almost a sexual joke, right? And a woman with a lover, intimately what he does, and cycles are so fundamental. Look at this regularity of these oscillations. Where do we have any indication that these oscillations that are so regular, they go down, they up in a certain particular time, they look very similar to each other? Any scientist will look at that and say, I think he will continue. There is everything, and then everything else, all these other things that are happening, are simply part of the picture. It's simply scaling up to bigger and bigger things. It's not going to destroy the cycle. There's no evidence, right? I'm not saying it's 100% like that, because of course, right, it could be that there are things we don't understand, etc. But right now there is no evidence of that. So we were kind of here last time during this part of the cycle, and this is where we are, kind of equivalent. We actually didn't cross yet this green line. That will be another sign that actually we are bullish. If anything, like I say, we are a little bit less bullish than last time. And so we will need to cross this line and then going towards the purple. The idea is that probably we are not going to reach the purple by the time we arrive here. I will have to draw this thing, because there is also, basically, there is an exponential decay here. What we could do is to draw this line. I can draw you this line, because even this is very regular. So if we draw a line that connects these guys, okay, it's not perfect, but Yeah. But let me see. It's more clear when you do it with price deviations. I have to click this thing. Okay, and we are in the log, right? Yeah, it doesn't work as, or maybe we need to connect. Yeah, we need to connect this other peak, maybe. Then this, yeah, it doesn't show up very clearly here this way. Maybe something like this, but I will have to do the correct calculation. Let's see. But it's much more clear when you do it with price deviations. But the idea is more or less this, where by the time next year comes, we don't have a lot of room to go up, right? We're not, like I said, I will have to do to draw the real curve. It is like a curve, but it's kind of like an exponential, but tell you more or less where we are supposed to end up. So I will try to add it next time to this graph. I want to make sure that I do it correctly. It's not as simple as drawing a line like this, but if there is a regularity of these peaks that can be modeled, then if that regularity continues, then we end up somewhere here, because here is where I'm expecting to have a peak. So the next peak should be somewhere here. And that is basically how big of a return over the last year we had, right? Because here was so the yearly average daily return was 1 so basically 0.76%. In the previous bull run was almost 1%. The previous one was 1.4. Amazing, right? And the idea will be you go and look at the price 1 year before when the bull run started, and then compound that for 1 year, and will tell you how big of a gain you had, right? So we can try to do all this. I kind of a little bit did this where I'm taking where we are right now, I'm projecting, given the average return that we're seeing right now, ahead of time. So for example, if these are current yearly return are consistent, we are going up 20% by March. It's very conservative, right? Because as we start to go up, if we leave this green line and start to go up, the return are going to be higher and higher. So this thing is going to update itself. And at the same time, it gives you a feeling of where we are at this particular point, given the information we have. So, and this is compared with the power law. The power law by itself should bring us to 130 next year. Now, if we go with current gains, it's going to be 217. Now, you can imagine, say, well, it's going to be much higher because we are going up, and so the return is going to be bigger. It depends, right? Because if we start to go up and then we have a big correction, etc. But yeah, it should be bigger, right? It should be something here. So it's possible that when I did it offline, when I used this method to actually fit the decay and calculate where we are going to be, it was more like 250, something like that, 250. So I'm going to do the calculation so we can have it here and see where we are supposed to end up. And in fact, I can add that once we know where we are supposed to end up, I can add it to the table and compare it, the theory, with actually what is going on moment by moment. Okay, I have several others, but I do want to, we are approaching more than 1 hour. I want to answer some of your questions. We don't have to go through all the indicators. I have like 15 of them. One interesting one that I want to show you is this one. we can keep an eye on this one because this is cool. I'm going to extend it more. In fact, I'm going to make a power law because I know already there is a power law because I did it in the past. So basically what we are seeing here, so I'm going to superimpose, but then I'm going to make a price model, because there is a relationship between these two things. I'm still working on this. But what we are seeing here, this yellow curve, the white one, of course, is the price of Bitcoin. And the yellow curve, it's Google searches. And so you can see Google searches are very strongly correlated. I didn't have time to add all the data before because it's basically kind of done by hand. You can, it doesn't, I don't know of a way of collecting the data automatically. Maybe there is a fancy way of doing it. But we can make a model of the price of Bitcoin based on Google search. That is another, when I did it last time, it was several months ago, it was a power law that was very similar to Metcalfe. And so, because, Google is a network, the activity in the network is, it's in Google, on the internet is network-like, and the interest in the searches, I think it comes from both from people that are already in the Bitcoin network, but also people who want to join. So it's another confirmation that what counts is all adoption. It's all adoption. And even the bubble can be explained as acceptations in the adoption. The general adoption is a power law. You will see when I plot this, you will see how nice of a power law we get. That is another way of explaining Bitcoin behavior. It's a power law of adoption. I'm going to add more information, but you see, it's kind of cool, right? Even this correction that we had, it's almost actually, you will think, we're going to monitor because I don't want to say incorrect thing, but it kind of corrected a little bit this going down, right? There is a decrease of interest. So hopefully it picks up, right? So it's kind of difficult to say if it is leading or following or whatever, but they are somehow correlated, and we can study it better. There are ways of showing which one leads what. There are this method of Granger causality, but it's kind of interesting. Maybe it's another thing that one can use to confirm, right? We are in downtrend because there is a change in sentiment or interest, etc. So it's something to add. Right now, we consider it more like a curiosity than something that it's helping us, right? But yeah, together with the other things, it's like one of these social indicators that it's kind of interesting to monitor. Okay, let me take some of your questions, and then maybe we can wrap it up. And these are see, this is where maybe I can show you these a little bit better. This is much clearer, how we kind of estimate the top. Here I'm doing it in terms of deviations from the trend. And you can see in this case, you can really draw a line, right? A line that connects. So these are deviations from the trend in percentage. When I take in the log, right? So this one was really huge, little bit less, and then you can connect them with a line. It's not TA, it's math, because connecting them with a line. Now, of course, when I do it theoretically, right, and they're using Python, MATLAB, I don't do it by hand. I use regression and real calculation. But here it's kind of illustrating like a visual aid of the idea, right? So because a line in this type of graph, log linear chart, is going to be an exponential. So you see there is it's incredible we can connect all these tops with one single line. It's what is going on. This is a regularity that needs to be explained. I don't know how to explain it because, you will not expect something like this that is mostly driven by FOMO to be this regular. Now, if the fact that it's going down is to be expected because, it's more difficult to push trillions of dollars and millions of dollars, when Bitcoin was very small. But the fact that it's so regular, it's weird. But if this continues to happen in this way, see, this red line, these red deviations will continue, will go up, and then because we are expecting the top to be here, the end of the next year, it will end up more or less there. Right now we are on the path to go there, so we are moving, and we are reaching there, and then it's supposed to go down. And if it reaches there, the way to interpret this is about 80% deviation from the trend. And then you say, okay, what 80% deviation means? You go here, right? You go to this chart that is basically the overall power law. So this, this central line is the power law. We have a support here. This purple line shows how long the power law has been right. When people say it's not predictive, okay, yeah, I predicted all this in real time because he predicted everything else, but this was since I discovered it. Today, there was another guy say, oh, the power law is new. It's not new. It's 6 years old. I mentioned power law since 2013. I have posts to show that, but this particular one is working since all this time. And so, don't you think this is predictive? It's super predictive, right? In terms of telling us what is the general behavior, but also the fact that is confined to this region during this time, but we go above it during this time. It gives us, tell me anything else that tells you all this information about Bitcoin. Nothing, absolutely nothing. But this does. And tell us that we are in a bull market, we are likely going there if this happens as it is. You see, the idea is this, right? I go there, I read what it tells me, what is the trend. So the trend is 130 by next year. Like we also saw it with the returns, right? 130,000. And a deviation of 80% from 130 is 200,000, So we get slightly different results if we do it with the returns. Returns is 250, and if you use this method, you get 200. But given we are two different methods, it's pretty consistent result, right? And it's very, very unlikely we go much higher than that, right? That we go to 300, 400, it's very unlikely. Impossible, nothing is impossible, right? But very unlikely. Okay, so I'm going to take some questions. Let's see. All right. Okay, show this question. Yes, it is. I do have an indicator. I'm going to refine it better because I'm going to, again, to make what is missing in our indicator. Right now we have 10 indicator and adding 2 more, this comparison of the cycles. So 12 indicators, right? And you're getting 12 indicators for $20 a month. And by the way, there is this annoying ad that I'm putting here, but basically we have a 40% discount for, it's going to be over by the end of the year, so get it if you can, a 40% discount. And it's, you can get 1 year subscription, or you can get 1 month 40% discount. And the 40 is also working for the 1 year, both of them. And I'm going to add soon a bunch of on-chain indicator. In particular, I'm going to make a model where you can show the relationship with addresses. You can show the relationship with hash rate. So it will show hash rate superimposed, but also it will give you a model of what is the expected price if it was only due to hash rate, if it was only due to addresses, and so on. And you can see, yes, there is a relationship, right? They wrote these entire papers on papers. And eventually will be a book, a scientific paper, academic paper, but I wrote Medium articles where I show that we are dealing with a network, and there is all this academic paper that show that when you have a network, the nodes, in this case, basically for us is addresses. Addresses are like a nodes of a network. It's a measure of the activity of a network. The nodes grow up like they grow as a power law, and the links grow also like a power law. And the links, because of Metcalfe, the Metcalfe law says that the value of a network is proportional to the links. And so, so we observe this beautiful power law. So when people say, oh, S curve, there is no damn S curve. There is no damn S curve. You will see when I make the model, you will see there is no, it's a power law. It's a beautiful power law between addresses. And so this is what we will do. We will do an indicator that shows addresses versus time. And you will see that is a power law. And we can fit the power law so you can watch it. And then we can show how the relationship between price and addresses goes. That is another power law. So it goes like this. The power law of addresses goes with cube. And the relationship between price and addresses is the square. I'm rounding. It's not perfect. It's more than, it's like 1.75. And this is where you get the power of a power law in time, because the two are related, right? You multiply the two exponents. So if you have that the addresses grow with the cube, and then the price reacts to the price with the square, to the addresses with the square, the price in time is 6, because we multiply the two exponents, right? 3 times 2, 6. And this is why the power law in time, this power law, it's a power law of 6 in time. So you see how beautiful it is. It's all connected. Tell me how that can be by chance, right? Many people that criticize the power law are not aware of these things. They didn't read my articles. They are not, they don't understand that it's much more than just a line. There is all these causation links. We are explaining how everything is related. And then the hash rate is also power law, and it's a power law that says hash rate equal price square. So it's a bunch of power laws, all internet connected with each other. And it's interesting. It's cool if Google, we're going to make a model, right? Google searches versus the price, and it's a power law too. Similar to the Metcalfe, but again, it's how can be by chance, right? It's network effects. Could look at Gary network. I don't know what is Gary network. Gary network, I don't know. Disclosure. So he's asking Gary network. I don't know. But send me a DM and explain me what Gary network is. I have no idea what Gary network is. Unless, are you making a joke? Is it a meme or something? I don't know what it is. Gary Gensler? You mean? What is that? Okay, send me a DM if it is something serious that you think is worthwhile to look at. I don't know. I will look it up. But if it is a meme, okay, tell us it's a meme. Does this line? Everything does this line. I don't know which lines you're talking about, but the main line in the power law are all based on theory. It's all predictive. It's all, of course, we do a fitting, but the fitting is done, when it was discovered, we did the fitting, and then you could, and, for example, H.C. Berger, he's one of the people that is working on the power law. He just came out recently. So see, look, 6 years ago, I published this because he tried to basically let people know about my model, popularize my model. And he wrote this Medium article, and he's bringing up the result that he had 6 years ago and updating it, not changing anything, not changing parameter, not changing anything. And I just posted like a few days ago, and it's perfect. Like you could use the same fitting you did 6 years ago and still get exactly the same behavior that you're seeing here. So, and in fact, many of us show that these parameters are stable over time. They became even more stable. The fitting is even better. Everything is predictive. That is the beauty and what is different from everything else. It's a theory that say this is the behavior that we are expecting, and this behavior will continue in the future because these things are predictive. Everybody that tells you they are not predictive, they don't understand what we are talking about. We are talking about a system that continues to behave in the same way. How much more predictive than that it could be? We are saying, no, this behavior will continue to exist because this is the DNA of Bitcoin. It's a power law. It's a scale invariant. It continues to be like this for the future. Right. Yeah. Yes, exactly. So this is all indicating top and bottom or reversal. Again, I don't know which graph you're talking about, but we are trying to do most of these things is predictive. We don't care about shit coins. I don't think I talked. Well, I don't know if you're talking about me when I was trading shit coins. I was trading them so I could get more Bitcoin, right? I had an algo that was going back and forth selling shit coins, and you were ending up with more Bitcoin. But yeah, at that time I was much less careful. Like I did have a big portfolio in altcoins, and it was like a hard lesson. You learn over time. Yeah, what is your predicted bear market? It's supposed to go down. Unfortunately, TradingView doesn't show more than 500 days ahead. So you see this blue one is 500 days ahead. So there'll be a point where it actually tells us what the bottom is. We could write it here. We could write it as one additional thing, but it's supposed to be 70K. You see it goes here down to 70K. In fact, why don't we write it down? That is a good idea. We can write it down. It's supposed to go down to 70K bottom. And the date, it's let's work with quarters, right, to give us a little bit room. Quarter 2026. This doesn't have to be this big. Let's make it a little bit smaller, like this. Yeah, so it's going to happen here. It's not like straight line. But actually, you see how we go down. When we go down, it is almost like a straight line. It's an exponential, very, very differently from it's much more an adventure. When we go up, we go up. When we have a correction, when we go down, we are pretty consistent in going down. It's very exponential-like, almost like a straight line down, in a log linear chart, that is like, it's an exponential. Very consistent. In fact, even the slope, if you go back to this graph, that is another regularity that I would like to understand. When we go down, you see how regular it is. It's almost like a straight line every single time. And the slopes are all very similar, very similar, very similar slope. It's really weird. I don't know how to explain it. Okay. Giovanni, do you think that we can predict it? Giovanni, thank you for all these good questions, guys. Giovanni, do you think we can better predict bear market bottom the top? Much better the bottoms, because we are so regular. In fact, in a sense, this is where when many people tell me, oh, can the power law, is the power law broken if we go to 500,000? No, because in theory, it can go a million, and then if it goes back to that support line, the power law still works, because the entire idea of the power law is that this bubble cancels. So if it goes up 1 million and it goes back to 70,000, it needs to go back to that 70,000. This is where the test of the power law is. And I'm very consistent with that, where if we don't go back to that, I will be the first one to say something is different. Something doesn't follow anymore the pattern that we observe all this time. And as a scientist, it's not that I'm going to close everything, so goodbye. We are going to continue to study and learn about Bitcoin, but we are operating under this idea that these regularities have been there all this time, and it doesn't make sense to abandon them. Why should we abandon them until we have evidence they don't work anymore? Right now, the most logical thing to do is to assume that they are real and they continue. Now, you're still treating this like if it was a GPS. You're not, I'm using this analogy all the time and say, if a GPS tells you turn right and you see a big, huge building because you have all this evidence that it's not really working, you're not going to turn, right? You're going to say the GPS doesn't work. But it's good to have a GPS, and this is what it does. It gives us a GPS. But yeah, the tops, see, the only reason we can even estimate what the top is because we do it in terms of the deviations from the power law. So the power law help us. Right? When people say, oh, the power law doesn't tell us anything about the top, it's not true, because you can use the power law as a way of describing the deviation and then see if there are regularities in the deviation. And there are. There is this decay, for example. So if you take seriously this decay, is it related to the power law? I would not say no, because maybe there is some kind of link between the overall path and the fact that there is this decay. Maybe there is a very strong link. It's just right now we don't understand it, but maybe it's all part of one single big picture. It's a regularity we are observing. We don't know if it will continue, but if it continues, then this what the size of a power law of a bubble is. If it goes higher, 300, 400, 500, and then it goes back to 70, the power law is intact. It's not changing. What is not possible is what Fred says or Plan C says. This. I don't know why they say this. I discovered the power law, so I'm not saying that I am always right, because it's open to investigation. Everybody can investigate it, but I have a little bit more experience dealing with this than them. What you cannot have is doubling every year and be still the power law. Or is one or is the other. It cannot be both, So that cannot happen. It needs to correct. Can you have 2 years going up and then go back to the power law? Yeah, but right now I'm sticking with the cycle being what we are, having this regularity. That is, let's say, part of a theory. When I created the theory, and you read my article about the theory includes all these components, including the regularity of the cycles being exactly like this. This is the picture that I'm sticking with until I have evidence that this picture is not true anymore, because it's not that, it's never been true. It has been true for all this time. So nobody can tell, at least as historical value, Bitcoin has done this. And if you're interested in Bitcoin as a science, besides making money, because some people are interested also in that, right? Studying Bitcoin as an historical thing, as a scientific thing, like, people publish papers on Bitcoin. So this is an historical thing that needs to be understood, why we were so regular, why this thing happened in this very precise manner, and are they going to repeat, So from an investor point of view, the past is useful if we can use it to understand the future. From a scientific point of view, this is still a contribution, even if it doesn't continue, because it has been true for all this time. My tendency is to think we continue, and everything seems to support that so far. There is no evidence that anything is changing. Can you explain briefly why it will not go? Okay, the first one is what we just say, right? If this regularity is real, then it's kind of out of the question. We are not going there. The second, there are other things, right? For example, another thing we can look at that I didn't show you is this. Let me show you. We have another indicator. I have so many. Is a quantile indicator. Is what actually, I don't know if you guys know, I'm looking for, his name is Plan C. He's like working on the power law. I would say it's kind of like a student of mine because I taught him about the power law, etc. And he had this idea of using this method that is called quantile, where basically you look at the statistics, the overall statistic of Bitcoin, and you're saying, if I take it face value, right? Because you look at the deviation, and then these deviations will have distribution, right? There are very large deviation, positive deviation. I imagine it's almost like a bell curve, but it's not a bell curve. It's we call it a long tail. In fact, I have also some criticism about this method, but let's not go into detail for now, maybe another time. But if you take at face value, it has a peak, right, where the majority of the value of the deviations are, and by the way, they are close to the bottom. So the majority of the time, Bitcoin spends it at the bottom or close to the bottom. And then it becomes less and less likely to go farther away, right? It's almost like having people that are giant. You're going to have very, very little of these people that are giant, right? Imagine this thing peaks. This is where the majority of events are, the majority of the deviations are. Again, you're using the power law as a reference to understand and describe everything happens with Bitcoin, right? We have a general trend plus the deviation. So the deviations are here, the majority of them. And then you go down and they become smaller and smaller, the big, large deviation because you're going on the right. This call is called a distribution, right? A statistical distribution. You're going to get a bigger and bigger deviation, right? So higher and higher value relatively to the trend, but they became less and less likely, right? There are fewer and fewer of these events, right? So if you take this distribution and you're including more and more elements, right? So you start to say, I'm going to look at the 1% quantile. That means you start from the left, so the smallest events, and you include only 1% of event up to a certain value, right? That will be for 1% quantile, 2% quantile, and you add. And this is what this graph shows. You're adding more and more, and so you're going to get, so 50% quantile will be, it will include more than half, because remember the peak is somewhere here, but you're including more and more events defined in terms of their deviation from the trend, right? The problem with this is because there is this decay of a peak. Yes, you could say, look, there is non-zero chance to go all the way to 99 quantile, right? So, for example, if we go December 26, when we are expecting the peak to happen, and we are looking what is like the top of the quantile, so basically including all the possible events, even the most extreme events, we'd go to 542,000. So that already tells you that a million, even under this incredible assumption that we get like some of the most extreme behavior that we ever observe in Bitcoin, we go all the way to 542. But that will mean that we do what we did, because where are the most extreme events? We are not here, because you can see last bubble was more like here, right? So these are like, I should put some marker, but imagine 10, 20, 30, 40, 50 quantile. This was not much more than maybe 70 or 80 quantile, right? It didn't go all the way to the top, because, and this one was a little bit closer to the top, but not really. So you see there is this decay, and basically saying going all the way there is only these two first bubble that we're able to go all the way there to that top quantile. So in a certain sense, you're saying their interpretation of this is, if we had a bubble that kind of looked like the first few bubbles that we had when Bitcoin went all the way to 20 or maybe $1,000, right? The first bubble after the halving, then yes, 500 is not out of the question. But you see what it means. It means that we will have to have that kind of crazy behavior when Bitcoin was only $1,000. We are 100 times bigger than that, right? So it's very unlikely that it does it, given how big the system is. You see how it works? And that is 500,000. A million, it will have to go, it's like science fiction, we are talking about going all the way here. But, if I show you these because the logs are very deceiving sometimes, because we think, we look at deviations, and, it's cool to, when you want to compare things in different sizes, but it gives you a feeling of how unlikely a million is when you do it linearly, because look, 1 million is over there. You see where it is, where a million is, and we are over there. So are we going there from here? Can you imagine? Look at the entire history of Bitcoin. You cannot even see these other peaks. And now imagine I'm drawing some crazy stuff where we go like this all the way over there, right? It's almost a joke. It's a joke, like if you are you will have to defeat anything that we ever saw. This is why we use the log, because they give an opportunity to put in a context and make everything proportional. But by the time you see how the chart looks linearly, imagine if now the price starts to do like this and go all the way there, right? And just, I don't know why people will say things like that, right? And within this, in particular, if we will go there in 10 years from now. That is an amazing thing. This is what the power law tell us, that we do go there, but in 10 years from now, it will take 10 years to arrive there, not 1 year. 1 year is over there, right? In 1 year, do you think we do all that and have statistics that were even crazier than what we had at the beginning, when Bitcoin was nothing, when it was very, very small market cap? It makes no sense. I don't know why people say these things. They are very deceiving. To me, it goes from being a meme and having fun to actually being almost a bad actor, I mean, you are giving false hope and misinformation about something that is very important, like Bitcoin. Why you're doing that? I don't understand it, I will never do that. It doesn't make any sense to me. Look at this. Does it make sense that we are going there? It doesn't. Okay. So yeah, 200, 300. Let's hope for that. Okay. Same question. I have not done the math to have an exact answer, but this will need a crazy amount of liquidity to go to 1 million. Yeah, so that is the other thing, right? To go to 1 million, we're talking about 10, 20, even just to go to 200, we need 2.1 trillion increase in the market cap, right? And even if you say, okay, for every dollar that comes in, we have a movement of 10 pair in the market cap. Even that is still an enormous amount of money. By the time it's a billion, we are talking about, 100 pair, 10 pair market cap, right? Because right now we are 100,000. We'll have to go up by a factor of 10. But it's crazy where the money is coming from. We're talking about trillions and trillions of dollars, right? $20 trillion, $18 trillion. It's absurd in a year, it doesn't make sense. Thank you. I know it's a little bit boring, it take forever. I'm going through all the details. I don't have fancy music, the background, etc., because I'm focusing on having a serious conversation with you guys, right? So if you are patient and you go with me through this analysis, etc., we are learning something. We're learning something together. So it's different, because I will not make even sense to do what other people do, right? I'm doing my thing. That is, I'm trying to use reason. I'm trying to use science. I'm trying to use calculations and trying to make sense of these together with you. And hopefully you find this valuable. Okay. 2028 is the beginning of a new cycle. The way I think about cycles, I'm using the top, and then I go from top to top. And so the end of a cycle will be 26 in my convention. Everybody can use whatever convention they like, and then that will be the end of a cycle. We use this terminology of the hours. We say 12 o'clock it's at the top, 3 is the bottom, 9 is when we have a bull market. Thank you. That is sweet for you to say that. Okay. My dream is to meet you. You are so nice, guys. You're so sweet, everybody. Thank you so much. Yeah, meeting people is the most amazing thing, because even people that maybe you had a little rough time online, etc. When you meet them online in real life, it's almost like meeting long-term friends, because beyond our differences, etc., there are more things that makes us common. We are going through these things together, because Bitcoin is much more than just an investment. Literally, hopefully they don't demonetize my video because I use a bad word, but listen, it's not like anything else. We are trying to change the world, yes, and meanwhile, sure, we want to be wealthy and we want to be independent, etc., but it's not like Peter Schiff and all these idiots say. It's not because we only want to make money. We want to change the world, and there is some type of very special person that understand and see Bitcoins for what it is. And when we meet, it doesn't matter the nationality, it doesn't matter our backgrounds. We are all, there are more things that are similar than different. And so it's almost like meeting relatives or brothers or long-term friends. It's amazing. I love to go to conference because of that. So I'm going to Nashville, so if anybody wants to meet me at a certain point, I will. You can DM me on X, and then we can meet somewhere. We can have coffee or whatever. We can maybe have a power law meeting or whatever. In fact, probably I will organize something like that. Let's go to eat pizza together or something. Let's have an evening where we all eat pizza and meet each other at Nashville. Let's do that. Yeah. Thank you. Yeah. It's not because I want you to force you to come to our Discord, but if you join the Discord, we have a lot of resources there, and there is a book list, posting different articles, etc. But I will try also maybe to make a video. At a certain point, I was reading this book Scale that I will continue to do. I took a little bit of a break, but every Thursday I was reading the book together, and I was going through the book. And there are already several episodes that you can look in the, if you browse my YouTube, they are there. So go to my YouTube, and there are a bunch of episodes about Scale. But eventually I want to read more book. But one of these days, that is a good idea. I can make a kind of a video where I show you different books and resources that you can look at, like different articles, different books about power laws, different critical systems. These are called critical phenomena. All these ideas of sand piles, avalanches, all these very relevant phenomena. And also network. There is a very nice book called Linked by Barabasi. So if you want to know about network, how they work, social networks. But yeah, we could make a video all about that. There are several books that you can read. When Bitcoin does hit 1 million, what do you think the price of loaf bread will be? I don't know. It's 10 years from now. So, and you didn't ask this question, but it's kind of related in the sense many people many times ask, But you don't include inflation. No, I don't include it because, at least not directly. The idea is that we use the price as they are shown in the market, right? And that, of course, if you read the price 5 years ago or 10 years ago, $10,000 10 years ago are not $10,000 now. But it's the number I'm reading. So when I'm fitting the power law, when I create the model, is whatever the price is at that particular time, right? So when we are predicting 1,000,000, maybe you want to, for the price, you want to wait 1,200,000 because that will be the equivalent of 1,000,000 10 years from now, right? But when we reach 1,000,000, it will be the million, whatever 1,000,000 means in 10 years from now. This is how we make it consistent. And you can always, calculate somewhere what 1,000,000 will mean by using a model of inflation that you like, whatever, constant inflation, 5%, 7%. Say given 7% a year, in 10 years from now, we will have this amount of inflation. So this will mean this, the fact is that we go up 10 times, right? So even if, let's say it's 40, 50% inflation, well, it's still a small number in comparison with 10 times, right? So that is the idea. But we will see, but to reach 1,000,000, it will take about 10 years. Now, we have 3 bubbles before that happens, right? Or 2 more bubbles. Well, 3 with this one. And so maybe not next time, because next time, if I remember well, the bubble is like 500,000. So next cycle, we are predicting a 500,000 bubble. And I think the next, after that, so before 10 years, 2 bubbles from now, 3 bubbles from now, including the next one, we should go beyond 1,000,000. So we will reach 1,000,000 first through a bubble, and then 1,000,000 would be kind of like right now we are talking $100,000. People will talk about 1,000,000 Bitcoin. That will be the reference price, the fair value price. Okay, guys, this was good. We kept it relatively short. And you had many good questions. Okay. Next time I will work more on the Google one because I think it's cool and I want to show you that it's actually a power law. And we can also look at some more on-chain information like the addresses and the hash rate, and we can go more in depth on that. But I will not worry about anything. We didn't talk about that crazy model where this, you take M2 and shift it by 12 weeks. I looked into that. Let's do it next week. Hopefully it doesn't apply because it was really pretty bad because I basically, if you take at face value of that model, we go down to 70K, but I don't think it's real, at least right now, but I will make some more posts about it. We can monitor it, and if there is any sign that it's pretty ominous chart, hopefully it's not real. But yeah, it's more a curiosity, but maybe we can look at it next Friday. Okay, guys, I'm going to stop here. I wish a good weekend. See you next time. Bye, everybody.